Right. So, what are we discussing? We are discussing the two types of fraud. What are the two types of fraud? Fraudulent financial reporting and the misappropriation of the assets, right? What did we study for fraudulent financial reporting? How would a company do the fraudulent financial reporting? By doing the MMM, then the management override of the controls, then why would management employees commit a fraud, and then we just studied regarding the manipulation of the accounts, regarding why would a company manipulate the accounts and how would a company manipulate the accounts, right? So one, to avoid the taxation. Second, when they are having the insufficient profits but still they want to declare the dividend, or they have the sufficient profits but they want to withhold the declaration of the dividend, or they want to maintain the share price or to receive the higher managerial remuneration. Okay, and then this is why a company would manipulate the accounts. And then you also have how would a company manipulate the accounts, right? So how would it manipulate? Either by inflating or suppressing. What does it say? The purchases and the other expenses, then inflating or suppressing the sales or the other items of income, then inflating or deflating the value of the stock. Then what does it say? Failing to adjust the prepaid expenses and the outstanding liabilities, and charging the capital expenditure to the revenue, or capitalizing the revenue expenditure. Okay, right? This is how a company would manipulate the accounts. And now if we come to the right hand side over there, what is that? That is regarding the misappropriation of the assets. Okay, right? So how can a company misappropriate its assets? One, they can misappropriate by embezzling the receipts, right? Embezzling the receipts, what I told you, customer paid the money, what accounting entry should be passed? Cash account debit to debtors account. But what entry has been passed? Bad debts written off account debit to debtors account, right? So what is that? Embezzling the receipts, right? Embezzling the receipts. Embezzle means misappropriating, right? What? The receipts of the company, right? So embezzling the receipts of the company. What you are doing? Debtor has paid the money, but you are misappropriating the collections on the accounts receivable, or you are diverting the receipts in respect of the personal accounts to the personal written off accounts to the personal bank accounts, right? So one, you are misappropriating the receipts. Second, what you are doing? You are stealing the physical assets or the intellectual property of the company. So what does it say over here? Stealing the physical assets, that is stealing the inventory of the company, right? Or you are stealing the intellectual property of the company. And what you are doing with the intellectual property? You are selling it to the competitor for a price, right? So intellectual property of the company, right? So stealing the physical assets of the company, right? So what are they stealing? They are stealing the inventory of the company. And why the inventory is being stolen? For the personal use, right? So why the employees of the company are stealing the inventory? One, for the personal use. Or second, what they do? All the newspaper which is coming in office every day, right? Newspaper which is coming in office every day, at the end of the month a particular bunch of newspaper would have been collected, that they are stealing. And what they do? They sell it to the newspaper fellow, right? So stealing these, stealing these scrap for the resale. Or what they are doing? Colluding with a competitor by disclosing the technological data in return for the payment, right? So one, what they are doing over there? They are embezzling the receipts. Or second, what they are doing? They are stealing the physical assets or the intellectual property. Third one, what are they doing? Causing an entity to pay for goods and services not received, right? So pay for the goods and services, but have they received the goods and services? Right, no goods and services have been received, right? No goods and services have been received, right? So what they are saying, every Sunday, right? Every Sunday there is a pest control, and every Sunday when the pest control fellow comes, you need to pay him 5,000 rupees, right? Is any fellow coming every Sunday to do the pest control? Nobody. But every week are you processing a payment of 5,000? Yes. So causing an entity to pay for goods and services not received. Are you understanding that? So one, the receipts of the company you are embezzling. Second, what you are doing, the receipts of the, yes, the assets of the company you are stealing. Yes, assets, physical assets are the intellectual property. Then you are causing the entity to pay for goods and services not received. That means payments are being made to the fictitious vendor. Second, you get a kickback paid by the vendor to the entity's purchase agent in respect of the inflating prices. What does that mean? That from the supplier you've purchased goods of 10,000, but supplier sends the bill of 20,000. You process the payment of the 20,000, and additional 5,000 is shared between the two. Right, so what does it say? In kickback paid by the vendor to the entity's purchasing agent in the return for the inflating the prices, and the payments being made to the fictitious employees. That means payments being made to the dummy workers, payments being made to the ghost workers. Right, that actually how many workers are working in the company? 1,000. So how many workers' salary should be processed? 1,000. But how many workers' salary is being processed? 200, 1,200. Right, so these 200 are the ghost workers, they are the dummy workers, right? Whereas the existing employees of the company, in their account double salary is going. Right, so payments being made to the fictitious employees. And what is the last one? Using the entity's assets for the personal use, right? Using the entity's assets for the personal use, right? So who has taken a loan? Director. And what is the security given? Company property is given as a collateral for a personal loan or a loan to a related party. Okay, right? So what does it say? Because yes, using the entity's assets for the personal use, right? So using the assets of the company for the personal use. Okay, right? So this is what, how the misappropriation of the assets can be done. How it can be done? By embezzling the receipts or stealing the assets, or by making the entity pay for goods and services not receipts, or using the assets of the company for the personal use. Okay, right. Then what does it say? One type of the misappropriation of the asset is the misappropriation of the goods. Right, so what is the big heading over there? Misappropriation of the assets. Under that, what is the subheading over there? It is the misappropriation of the goods. That means the inventory of the company is being misappropriated, right? Would you like to take steps to prevent the inventory of the company from getting misappropriated? Would the company like to take steps to prevent the inventory of the company from getting misappropriated? Yes, so for that, what does it say? Yes, in that case, what should the auditor check? That whether the, yes, they are doing the periodic physical verification. So record keeping about the physical quantities and their periodic check. Right, so one, whether there is the record keeping. Second, what you need to check is the rules and procedures for allowing the people inside the area where the goods are kept. Right, so any person of the company cannot enter into the warehouse or the godown or the factory of the company and dispatch goods from there. Right, so there should be access control in that case. Right, then what does it say? There should also be the policies and procedures. There should also be the security arrangements to see that goods are not taken without the proper authorization. And what you can also do is the ratio analysis. Okay, you calculate the inventory turnover ratio and you see that it has substantially reduced. Immediately it might indicate to you that the inventory of the company has been misappropriated. Right, you calculate the inventory turnover ratio and you find out that it has substantially fallen down. So it might indicate what? That the inventory of the company has been misappropriated, right? So what does it say? Fraud in the form of misappropriation of goods is more difficult to detect. So for this, management has to rely on the measures, right? So as an auditor, what are the measures that you are going to verify? One, the record. Second, you are going to verify the rules. Third, you are going to verify the security arrangements. And last, you are going to do the ratio analysis. Right, so what does it say? It is very difficult to detect the misappropriation of the goods, right? That is why the management should rely on the measures. And auditor, when you go for the audit, you need to check those measures, right? So here, are they talking about how misappropriation of goods is done? No, they are talking about the measures, right? What are they doing for the misappropriation of the goods? They say, auditor, you need to verify the measures, right? So what could be the measures? One, there should be the records. Second, there should be the rules. Third, there should be the security arrangements. And last, they should also do the ratio analysis, right? Also should be, what should be done is the ratio analysis. Okay, right. Then another retail question which we have under the misappropriation of the assets. Are you with me? Another retail question which we have under the misappropriation of the assets is the defalcation of the cash, right? It is the defalcation of the cash of the company. That means misusing the cash of the company, right? It is the defalcation of the cash of the company. And defalcating the cash, what does it say? How you can defalcate the cash of the company? One, either by inflating the payments, or second, by suppressing the receipts, or what you can do is by taking the wrong totals in the cash book, right? So one, what does it say? By inflating the cash payments, by inflating the cash payments. Second, by suppressing the cash receipts, right? By suppressing the cash receipts. Under this cash receipts, you have that topic over there regarding the teaming and the leading. And then you also have by casting the wrong totals. Casting means totaling, right? So by taking the wrong totals in the cash book, right? By casting the wrong totals in the cash book. Okay, right? So defalcation of cash. Could it be a wholesale question? Right? Can they ask you regarding the defalcation of cash? Then what you will write down? Inflating payments, suppressing receipts, and casting the wrong totals. Can they only ask you a question regarding inflating cash payments? Right. Or can they only ask you a question regarding suppressing the cash receipts? Yes. Are you understanding that? Misappropriation of goods. And what is the second retail question over there? Is the defalcation of the cash, right? It is regarding the defalcation of the cash, right? So if you come to the question bank over here, what does it say? Misappropriation of assets, right? So that is the first one. Embezzling the receipts, stealing the inventory, paying for goods and services not received, and personal use. Then what does it say? Fraud in the misappropriation of goods is still more difficult to detect. So you need to talk about the various measures which the auditor should check. Right. Then after that, there is the question, discuss the different ways in which the defalcation of the cash may take place, right? So you have to write down all the 3 points under the defalcation of the cash, right? Then after that, 2 times, what is the question asked in your exams? Suppressing the cash receipts. Are you understanding that? Right? What is the question asked in your exams is regarding the suppressing the cash receipts. Okay. Right? So inflating the payments, right? Inflating the payments, or by suppressing the cash receipts. Okay, right? So over here, what are the other questions in the correct and correct? Fraudulent financial reporting only involves manipulation, falsification, or alteration of accounting records. No, how many M's were there? 3 M's, right? The fourth one was the management override of control. But manipulation, misrepresentation, or the misapplication of the accounting policies and principles. So what does it say? Manipulation, misrepresentation, or the misapplication. Okay. Then misappropriation of assets can be accomplished by embezzling receipts only. No, there are 4. What does it say? Embezzling the receipts, or stealing the physical assets, or causing an entity to pay for goods and services not received, or using the company's assets for the personal use. Right? So that is the misappropriation of the assets. Then misappropriation of assets involve the theft of an entity's assets and is often perpetrated by employees in large and material amount. No, it is generally committed in the small and the immaterial amount, right? In the small and the immaterial amounts. Then misappropriation of assets is often accompanied by the false or misleading records or documents in order to conceal the fact that assets are missing or have been pledged without the proper authorization. No, what does it say? Misappropriation is often accomplished by the false or the misleading records or documents in order to conceal the fact that the assets are missing. Or what does it say? Often, yes, also pledged without the proper authorization, right? So probably this answer, same to same, has been written over there, right? So it could be marked as the correct. Okay, right. Then also, what does it say after that? Right? What does it say after that? Teaming and lading is one of the techniques of suppressing the cash receipts. Yes, steaming and lading is one of the techniques of suppressing the cash receipt. Money received from one customer is misappropriated, the account is adjusted with the subsequent receipt from another customer, and so on. Teaming and lading is one of the techniques of inflating the cash payments, right? Teaming and lading is one of the techniques of suppressing the cash receipts, correct. Is it one of the techniques of inflating the cash payments? No. It is the method of the suppressing the cash receipts and not of inflating the cash payments. And this primary responsibility we have already seen. Okay, right. So now coming to the misappropriation of the assets. In that, now coming to the defalcation of the cash, in which we have the inflating the payment or suppressing the receipts, or by casting the wrong totals in the cash book. How do you take the wrong totals in the cash book? Now this is possible when the company is maintaining the manual books of account, right? So what does it say? Manual books of account, this page total, right? 200, 300 and 100. What is the total? 7,000. And this total, taking it to the next page by casting the wrong totals in the cash book. Right, by taking the wrong totals, right? So showing the higher amount of the expenses than what actually is. Like yesterday I showed you when we were doing value weighted selection, 10 rupee, 20 rupee, 10 rupee, 20 rupee. So easy to take a wrong total. Right, so easy to manipulate by taking a wrong total over there. Okay, right. And then what does it say? By inflating the payment. How can you inflate the payment being made by a company? One, you can make a payment against a fictitious voucher. Second, you can make a payment against an inflated voucher. Right, so one, there is no pest control done at all, but you are processing a payment of 5,000. Or second, pest control was done. How much was the amount of the pest control? 5,000, but what you said? 50,000 pest control charges. Right, so inflated vouchers or the fictitious vouchers. Then third one, payments being made to the dummy workers. Right, payments being made to the dummy workers and casting a larger total for the petty cash expenditure and adjusting the totals in the detail column so that the cross total show the agreement. Okay, right, so by inflating the cash payment. So what are you inflating? Right, the expenses. How you are inflating the expenses? By showing the fictitious vouchers, or you can show the inflated vouchers, or you can show the inflated workers. And dummy workers, what I can call it as the over here, the inflated workers, right? More workers. How many workers are working in your company? 1,000. But what you showed? 1,200. Or by casting a larger total of the petty cash expenditure. Okay, right. Then what is the next one we have over there? By suppressing the cash receipts. And in the cash receipts, what do we have over there? First one, teaming and lading. Just read it. Everyone, please read the teaming and lading. Yes, all of you read the paragraph. Did we discuss it today only? Teaming and leading. Teaming and leading. Right, what is part 1? Amount received from a customer being put in the pocket. Then somebody will ask, call the customer A. Arey, customer A, you've not paid. But has he already paid? Right, so nobody should not come to know that whatever money I received from A has not been accounted for. What you do? Money received from another customer subsequently being credited to the account of the customer who paid earlier. And similarly, money received from the customer who's paid thereafter being credited to the account of the second customer, and such a practice is continued so that no one account is outstanding for payment for any length of time, which may lead to the management to send out a statement of account or to communicate with him. Right, if you keep it outstanding for a long time, management may call up, and then what the customer will say, I to paid. So then the fraud may be revealed. So that is why what you do when the subsequent customer pays, you adjust it against the earlier customer outstanding amount. Is it clear to all of you? Right. So that is steaming and leading. Okay. Right. Then after that, what does it say? Customer paid you the money. Right. So what accounting entry you should pass? Cash account debit to customer's account 10,000. What you do? One, bad debts written off account debit to customer's account 10,000. Another, you have little mercy on the company. So what you show? Cash account debit 8,000, discount given to customer account 2,000, to customer's account 10,000. So one, what does it say? Not accounting for the cash sales fully. Or second, not accounting for the miscellaneous receipts. That means you sold the old scrap or the newspapers of the company. Now by selling those scrap, you received 300 rupees. But what you said? Nothing received. Right? Nothing received. So not accounting for cash sales. So one, what you're doing, you're taking the what do you say, the old newspaper home, right? So that is your stealing, right? And second, what, you're selling it in the company only, but the money you're putting it in your pocket. You're saying that no money has been received, right? So not accounting for cash sales, then not accounting for miscellaneous receipts. Then what does it say? Adjusting the unauthorized or the fictitious rebates, discounts, allowances, etc. to customers and misappropriating the amount paid by them. So customer has paid, but you're showing an unauthorized discount, and then customer has paid, but what you're doing, you're writing off it as a bad debt, right? So what happens? Customer has paid, but one, what you do no accounting of the same. Second, you show a unauthorized discount. Or third, what you do, you show the account as a bad debt. You say bad debts account debit to customer's account, right? Bad debts account debit to customer's account. Are you getting that, everyone? Okay, right? So one is steaming and leading. Then after that, not accounting for cash sales. Then showing the unauthorized discounts. Then writing off the debts in respect of which the balance is received. Then not accounting for the miscellaneous receipts. And say company has an old laptop, and then what you said, oh, this old laptop, no value, write it off. And then what you did? You sold this old laptop of the company and you received 5,000. And this 5,000, did you record? No. Selling them subsequently and misappropriating the proceeds. Right? So writing down the asset value in the entirety, saying that this laptop 0 value. But later on you sell it, and by selling you get the 5,000 rupees. But that 5,000, do you record it in the company books? No, you are misappropriating the proceeds. Okay. And what is the last one? By casting the wrong totals in the cash book. Is it clear to all of you? Right. So that's a huge discussion over there regarding the types of the fraud. What are the types of the fraud? The fraudulent financial reporting and the misappropriation of the assets. Okay, right. Now listen to it one more time. Right, what are the two types of fraud? It is the fraudulent, right? What is it? It is the fraudulent financial reporting, or it is the misappropriation of the assets. Is it right, everyone? It is the fraudulent financial reporting, or it could be the misappropriation of the assets. What did we discuss right now? Okay, what are the sources? That is, how can a company do the fraud in accounting, or how can a company do the misappropriation of the assets? So what did we say? They can manipulate the accounting records, that they can do misapplication of accounting principle, they can steal the inventory of the company, they can embezzle the receipts. This is how a company can do the fraud in the accounting, or how the company can do a misappropriation of the asset. Now please listen to me carefully. Next question. Okay, why would a company do the fraud in the accounting, and why would the company do a misappropriation of the assets? So why would it do so? That means there is a fraud risk factor. And what are the fraud risk factors which we have over there? Yes, fraud risk factors, IPO. What is I? the incentives or the pressures, or there is an opportunity to commit a fraud, or there is an attitude, there is a rationalization to commit a fraud. Right? There is an attitude, there is a rationalization to commit a fraud. Are you all getting this? Had we studied this question, okay, why would a company commit a fraud? Incentive, pressure, opportunity to commit a fraud. Right, so incentives or pressure, or there is an opportunity, or there is the attitudes and rationalization. Are you all with me? Right, so one question which we discussed was what? How would a company do the fraud in the accounting, and how would a company do the misappropriation of the asset? Now what we are discussing, why would a company do the fraud in accounting, or why would a company do the misappropriation of the asset? And under each one of them we have three. What are the three? Incentive, pressure, opportunities, and the attitudes and rationalization. So now we have 6 questions over here. Everybody please look over here carefully. What are the 6 questions we have over there? What is the incentive pressure behind doing the fraudulent financial reporting? What is the opportunity behind doing the fraudulent financial reporting, and what is the attitude rationalization, the justification behind doing the fraudulent financial reporting? And here what do we have? What is the incentive behind misappropriating the asset? What is the opportunity from where you are able to misappropriate the asset? And what is your attitude rationalization behind misappropriating the assets of the company? Are you able to follow these charts, everyone? Okay, right. You know, when we had studied the risk assessment procedures of 240, right? Risk assessment procedures of SA 240. What was the last risk assessment procedure? Evaluation of fraud risk factors. So right now what I'm doing over here is the evaluation of the fraud risk factors. Are you understanding this chart, everyone? Yes, what does it say? Yes, if you look at it in your textbooks, right? So detection of fraud error is a duty of auditor, that we have already discussed. Now what does it say? Fraud risk factors and the possibility of fraud. What is fraud risk factor? Which gives the IPO, right? And this is divided under the FFR MOA, and under each of them you have incentive, pressure, opportunities, and the attitudes and rationalization. Yes, are you reading it? What does it say? Risk factors relating to misstatement arising from, yes everyone, fraudulent financial reporting. And under that what you have? Incentives and pressures. You have the opportunities, and you have the attitudes and the rationalization. And second one, the misappropriation of the assets. And under that what do you have? Again the incentives and the pressures, then you have the opportunities, and then you have the attitudes and the rationalizations. Everybody, are you understanding the 6 questions over here? Right, the fraud risk factors relating to FFR and MOA. Right, so maybe if I write it another way, fraud risk factors for FFR and for MOA. Right, what is FRF, everyone? Fraud risk factors. And then what we say? What is the incentive, pressure? What is the opportunity? What is the attitude rationalization? And here also, what is the incentive, pressure? What is the opportunity? And what is the attitude rationalization? Right, the fraud risk factors. Is it clear to all of you? Yes, is this clear to all of you? Okay, right. Now let's have a look at the question bank. Right, what does the question bank ask? Right, question bank, have we seen all these questions over here in the question bank? That primary responsibility. Okay, right, look at it, what it says. Fraud risk factors are what? The events, conditions that give a IPO. Further, the nature of the industry or the entity's operations also provide the opportunity to engage in fraudulent financial reporting. List out some of the cases where these opportunities may arise. Like say, let me do the marking of this as 1, 2, 3, and this as 4, 5, and 6. What is the question? Read this question. Opportunities for fraudulent financial reporting means, which is the question? 1, 2, 3, 4, 5, 6. It is the 2, right? The opportunities for the fraudulent financial reporting. Then next question. Inadequate internal controls over assets may increase the susceptibility of misappropriation of those assets. State any 3 examples of such occurrence of misappropriation of the assets, right? So inadequate internal control, that means it gives you an opportunity to do the misappropriation of the asset, right? So which is it over here out of 1, 2, 3, 4, 5, 6? It is the 5, the opportunity to do the misappropriation of the asset. Everybody, are you able to identify what we are discussing? Okay, right. Now what we need to do, we need to discuss these risk factors. Okay, and obviously for each of the 6 factors, for the first factor, what should be the question in your mind? For the first question, do we have to discuss 6 questions over here? Yes, for the first factor, what should be the question in your mind? Okay, management is doing fraud in accounting. They are doing accounting fraud. What is the incentive they have? Or what is the pressure that they are having because of which they are doing the fraud in the accounting? So what is the pressure? There is high degree of competition. There is high vulnerability to rapid changes. Obviously, if there is high degree of competition, there is decline in the customer demand and there are increasing business failures. There are operating losses making the threat of the bankruptcy, foreclosure or the hostile takeover more possible, imminent. Then there are recurring negative cash flows and there are new accounting statutory or the regulatory requirement which the company is not able to comply. And that is why they are doing a fraud in the accounting. Right? So what is the incentive? What is the pressure? Why they are doing? Like say, there is a company whose last year they had 10,000 customers and this year they are having 13,000 customers. Is there a fraud risk factor on the management of this company to having an incentive or a pressure to do a fraudulent financial reporting? You understand everybody what I have written? Is there a fraud risk factor? Is there an incentive pressure to do a fraudulent financial reporting? No. The going is great. 10,000 now 13,000. But what does it say? Last year sales of the company, customers of the company 10,000. This year come to 700. Now, is there a fraud risk factor which gives an incentive pressure on the management to manipulate the accounts of the company to do the fraudulent financial reporting? Yes. So where does it come from? It says the competition. Why competition? Because there are rapid changes. There is change in demand. There are business failures, operating losses, recurring negative cash flows and new accounting requirement. Okay. Second one. What does it say? Company, very easily, conveniently, they are doing the fraud in accounting. From where are they getting the opportunity? Because internal control mainly comes for the misappropriation of asset. Here, they are doing fraud in accounting. The actual value of the investment is 200 crore. They are telling everybody value of our investment is 5,000 crore. Why? Because it is a transaction with your related party. Right? Then second, what does it say? They have a strong financial position, ability to dominate a certain industry sector that allows the entity to dictate the terms or conditions to the supplier, and they may enter into transactions which are non-arm's length transaction. Right? What is an arm's length transaction? That if you go to Chroma to buy a AC over there, then say how much does it charge you? Say example 70,000. Just example I'm taking. Right? So you go to Chroma. So any person goes to Chroma. How much is the cost of the AC over there? Say 70,000. But now what happened? This company, it is able to influence a control over the Chroma. Right? So that is why they can purchase an AC for 5,000. Right? So is 5,000 an arm's length transaction? No, it is not the market price. Right? It is not the market price. So one, what does it say? The transaction is NONCB. Who is ONCB? outside the normal course of the business. Second, what does it say? It is not an ALT, not an ALT, not an arm's length transaction. Then what does it say? Asset, liability, revenue, expense are based on the estimates that involve subjective judgment. Okay, whether we will win the case or lose the case, subjective judgment. Right, so easily they can do a fraud in the accounting. Then what does it say? Significant, unusual or highly complex transaction. Right, so unusual transactions, complex transactions. Again, what they are doing a fraud in the accounting. See, I am telling you, right, fraud in accounting is my center point. Right, it is my center point. Any point you say, again where you need to come down to the center point. Okay, what is the company doing? They are doing the fraud in accounting. What is fraudulent financial reporting? Simple language, it is a fraud in accounting. And the question is, why are they doing fraud in accounting? So one, they had a pressure. Why they had incentive pressure? Because they are not doing well. Huge amount of competition and like decline in demand. Then how come they are able to do the fraud in accounting? Because they are doing a lot of related party transactions which are not in the ordinary course. Then they are doing the non-arm's length transaction. Then they are doing transactions which involve the judgment where there is subjective judgment. Then they are doing the significant, unusual and the complex transaction. Then they are doing a lot of transactions with the companies which are registered in the tax haven. A Swiss account, Mauritius bank account, where what does it say? Where the tax liability is zero. Right, so again they are doing the fraud in accounting. Right, here is the opportunity coming from the internal controls? No. Right, where does it come from, the internal control? In case of the misappropriation of the assets. In case of the misappropriation of the assets. Has this question been asked in your exams? Yes, has this question been asked? Right, so ONCB, then it is not ALT, not the arm's length transaction. Then there is the subjective judgment. Then what does it say? It is the complex, unusual transactions, and then the company is entering into the transactions with the tax haven. Right, then last one, what does it say? Why are they doing a fraud in the accounting? Are you understanding that? Why is the company doing a fraud in accounting? Why? Because they are. Why is the company doing fraud in accounting? Because they are known for that. That is their USP. You understand now? It's their attitude. It is their rationalization. They say tax, we never pay. Right, so it is, they are known for it. Why are you doing the non-compliance? Do you have any incentive? Do you have any pressure? Do you have any opportunity? Nothing. Just the attitude. Okay, we are known for it. We will see what anybody can do to us. Right, whether they will take away our lives or what if we do a fraud. So they are known for it. Right, so known history. Then management is interested in maintaining the inventory price or the earning trend of the company. Then auditor is telling the management, your company internal controls horrible. There are significant deficiencies in internal control, SDIC. Auditor is issued letter of weakness. He is telling company very bad internal control. They say let it be. Management's failing to remedy. They know there are weak internal control. Then you should rectify now. Nahi, attitude hai. What is the attitude? There is weakness. There should be few weakness. What does it say? It is the attitude. Then what does it say? Inappropriate means to minimize the reported earnings for the tax motivated reason. Then what do they say? They make no distinction between the personal and the business transaction. What is it? It is their attitude. They don't make a distinction between the personal and the business transaction. And how can you get a sense that something is wrong with the attitude of this, with the attitude, the rationalization of this management? How can you come to know that there is something wrong? There's the attitude of this management not good. No, they are saying, we are known for evasion of taxes. We are known for non-compliance with law regulation. What does it say? We want to maintain the share price of the company. Attitude, not good. Obviously, this will be shown. This will be reflected in the strained relationship between the management and the auditors. Right? The strained relationship, right? So there is a lot of tension going on between the auditors and the management of the company. They are fighting like cats and dogs. You understand what they are doing? Catching each other collars. So there are frequent disputes. Then there are unreasonable demands on the auditor. What they are telling, oh my God, poor auditor. What they are telling auditor? Okay, auditor, you came for audit on 2nd April, 5th April, issue report and run away. Unreasonable demand on the auditor. Unrealistic time constraints regarding the completion of the audit. They are saying, auditor, we will prepare the audit report and give it to you. You just sign. Auditor will say, my teacher taught me audit report format. I want to use it somewhere. You understand? Right. So, right. What does it say? There is a, listen to me, re Baba. This can come as a retail question. When the question comes in your exams, you will say out of syllabus. Because you only know the incentive pressure, opportunities, and the attitude rationalization. But in the attitude rationalization, there is a hidden gem over there. What is that gem over there? Okay, there is a strained relationship between the management and the auditor. They are not on the good terms. Right? They are not on the good terms means they are fighting. There are frequent disputes. Then there are unreasonable demands on the auditor. Then what does it say? There is dominating management behavior. Dominating management behavior means what they are telling auditor? Auditor, you want to do checking? Sit over here. I will bring 3 vouchers for you. Check these 3 vouchers and go home. Auditor says, my teacher also taught me audit sampling. You understand that? So dominating management behavior. And now, yes, can anybody help me? In point number 3, I also want to write D. Because I wrote first one is dispute. Second is the demand, unreasonable demand. Last one is the dominating management behavior. But for this also, I want to write down the D. Now, even you might have become good in manipulation. Yes, what does it say over there? Restrictions on the auditor that inappropriately limit access to people or information or the ability to communicate effectively with TCWG. What is management doing? Imposing a limitation on the scope of the audit. Generally, what we do, if they impose the limitation on scope, we may issue a disclaimer of the opinion, right? So that's the limitation on scope, right? So there is a array in the exam, how they will ask a question. There is a strained relationship between the auditor and the management. You know what is strained? If they don't ask strained, they will ask strained. Yes, there is the relationship between the management and the auditor is not going fine, right? So again, auditor, right? But most probably what they will use over there is the strained. So what is strained? There are the frequent disputes. There is unreasonable demand. There is dominating management behavior, and there are restrictions which might lead the auditor to issue a disclaimer of the opinion. Are you understanding that? What is that? 1, 2, 3. What is 1, 2, 3? Why a company would do the fraud in the accounting? What are the incentive pressure? What are the opportunities? And what are the attitudes and rationalizations? Okay. Right, then after that, why would a company misappropriate its assets? What is the incentive pressure? What is the opportunity? And what is the attitude and the rationalization? Okay. So what is the incentive? What is the pressure? So here what they say, personal financial obligations. Then the adverse relationship between the entity and the employees. And why there is an adverse relationship? Again, this could be the retail question. Right? Why there is a adverse relationship? You are not pro the organization, you are anti the organization. Right? You are against the organization. Why? Because they have told you, okay, we are going to remove you from the job after 2 months. So then you say, okay, I have 2 months time. In 2 months I will manage. Right? So known or anticipated future employee layoff. Okay, very soon you would be removed from the company. You says then till that time I will manage. Then what does it say? You expected a pay rise. But what does it say? They did not increase your compensation. Right? So employee compensation or benefit plans, there are anticipated changes. Or the promotion, compensation or the other rewards are inconsistent with the expectations. Right? They are inconsistent with the expectations, right? So what does it say? The incentive or the pressure. Why there is an incentive to misappropriate the asset? One, I told you, medical treatment expenditure. So that's the personal financial obligation, right? Second, there is an adverse relationship. Why there is an adverse relationship? Anticipated employee layoff or employee compensation. There have been changes made recently, or the promotions compensations are inconsistent with the expectations. Okay. Then what does it say? Opportunity. What did we say? Mainly an opportunity. From where does it come from? Inadequate internal control. Right. So one, again we have a retail question over there regarding the inadequate internal control. Does it give an opportunity to do the misappropriation of the asset? Does it give an opportunity to do the misappropriation of the asset? Yes. What does it say? Inadequate segregation of duties, inadequate oversight over management expenditure, inadequate record keeping, inadequate authorization, inadequate physical safeguards, inadequate management understanding of IT, inadequate access controls. Right? So all these points over there are regarding the inadequate. So there is a control, but it is inadequate. And second one, there is no control. Right? Second one, what does it say? There is no control. Lack of timely and complete reconciliation of asset. Lack of the documentation of the transaction. And lack of mandatory vacation for the employees. Like, you know, in software companies and all, there is a concept of core leave. That, you know, pay, what you say, sick leave and the core leave. Right? So like in an year, you can take 20 leaves. Right? You can take 20 leaves, but out of these 20 leaves, 10 leaves you can take them 1, 2, 2, or whichever way you want. And 10 leaves you have to take it in one go. And now these 10 leaves you have to take it in one go, right? And it's called as the core leave, and this is the sick leave. Right? If you take it in one go, that means Saturday, Sunday, 5 days of the week, Saturday, Sunday, again 5 days of the week, and Saturday, Sunday. So in total it comes down to 16 days. Are you understanding that? Right? And then after that, what does it say? 16 days when the employee of the company is not coming to office, somebody else will do the work in his absence. Right? That, see, 1 or 2 days person not coming, they can manage. But now for 16 days, for 2 weeks, that person is not coming to the company. So now somebody else will take in charge of the work. And when that somebody else takes in charge of the work, he will come to know whether any fraud was being done by this earlier employee who is on leave. Right? So even if there is lack of mandatory vacation, okay, you see this employee is never ready to leave office. Right? He's never ready to go on vacation. So probably he knows, one day I go on vacation and the fraud may be revealed. Right? So lack of mandatory vacation of the employees. Right? So what is it over here? This is all the inadequate and the lack. Okay. And then, right, the opportunity. The opportunity to misappropriate the asset of the company comes from the nature of the asset. The opportunity to misappropriate the asset of the company comes from the nature of the asset. Now, the uncle was working in the Cadbury godown. That is why the children were saying that today evening when you come, get this Cadbury, get that Cadbury. Say, uncle was working in a chemical godown. Then children would not have said, no, today get this chemical and that chemical. Please, please. Don't make the noise, please. Right, you can go. Right, you can just open the door and just leave out of the class and never again come also. Right, not required for you. I don't think you deserve to become a chartered accountant. You first need to gain your senses. What is it that you are doing? What is it? What is it that you're gaining from it? Craziness, even I understand, but so much of it. You're making a fool out of yourself. You know, you are inviting, like it's bad. There's nothing great that you are doing. And you're not even in your senses when you're doing that. I'm telling you, if you become a chartered accountant, it will be a loss for ICAI. If people like you become chartered accountants then. No, you will spoil the profession. Because your mind cannot have the rationality. You don't have the brain cells working correctly. What is it? You think, no, sit at one place today for 10-15 minutes and think what you are doing, what you should achieve in life, what you should do for your parents, what you should do for the community, what you should do for the society. Think of something more productive, no? Think of something better. Be in your senses. Nothing great expected. You can live a mediocre life for the rest of your life, yeah? Earn 10,000 rupees per month and earn 15-20,000 rupees per month and 2 times food from wherever you can get. You understand? No, you go near a temple, you go anywhere, you do some social service over there, they'll give you food. Your parents are also taking care of you. Right? There is no, like it's beyond a particular limit. And see, actually today's generation is such where you are not supposed to preach to them. That is what I have realized and understood. So I don't believe in it also. Like, do hell with your life, to be very clear with you. You understand? I have not anything great, but reasonably. I have found out my purpose of life little bit. I'm trying to perform my role. Right? And nobody is waiting. The world is not going, it's not going to make any difference to the world if you don't become a chartered accountant. कुछ फर्क नहीं पड़ेगा किसी को नहीं no friend nothing no family nothing nobody it makes a difference to it only makes a difference to your life and I don't want to preach please means I just don't like to do it anyhow it is not required you sit in the class you listen to me carefully if not you just keep quiet you copy down what I'm writing over here if not just open the door and walk off just walk off. Okay, right. So what are we talking about over here? The nature of the asset of the company, right? What are we saying? That the nature of the asset is only such that the asset of the company could be misappropriated. Like what I told you, because that uncle was working in the Cadbury warehouse, that is why the children were asking for it. But if the uncle was working in the chemicals, they would not have asked for it. Say one company, every day it is handling 10 crore of cash. Their everyday cash collection is 10 crore. And another company, zero cash collection, all banking transaction. Obviously, what risk is there for company A of misappropriation of asset? That risk is only not there for company B. Why? Because they don't have any cash only. Are you understanding that? Okay. Now, one employee of, yes, what does it say? One company, it is dealing in the diamonds. Yes, diamonds, you would have seen some old-time movies, you know, some 20-30 years back, where in the movies there used to be a lot of trend of smuggling of diamonds. And there used to be a blue color pouch. And in that blue color pouch, there used to be a lot of diamonds. And on those diamonds, they used to put it on a table. And then after putting it on the table, there used to be a spotlight coming from the top. And then it used to glitter and sparkle. And then they used to say that this diamond, the valuation of them is 700 crores. Right? So that small pouch, such a small pouch, right? You manage to misappropriate. What you have done? A great amount of the misappropriation, right? So one company is dealing in the diamonds and another company, it is dealing in Syntex water tank. You understand? 200 liter, 300 liter, 500 liter water tank. Now, how much ever be the dark night and how much ever you ensure that nobody sees you while taking the water tank, you will be noticed only. Or say the company is into poultry. You understand? Now, when you are doing the audit of the poultry, right, the chickens are there in it. It's small, 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 small. When you go for counting, 31st March, they open the tray and they make you count. Okay, these are all the chickens over there which have been kept. And now you want to misappropriate. You put it in your tiffin box. It will make noise, no? Will it make noise? You understand that? So the nature of the asset of the company is such that it can be misappropriate or it may not be misappropriate. Yes, misappropriate. You cannot misappropriate it. Right? So what does it say? Large amount of the cash. Then inventories that are small in size, high value or high demand. Like what did I told you? Diamonds. Easily convertible assets such as bearer bonds, diamonds or the computer chips. Right, the bearer bonds, right? So now say some auditor, he would be doing the audit of TTD also, no? The Tirupati Tirumala Devasthan. Okay, can you imagine the inventory and the fixed assets and the cash and all which the auditor would be getting to see over there, right? They have so much of collections where people put in the gold over there, right? All the jewelry of the god, right? All that the auditor will say physical verification. Right? As an auditor, what you will say, jewelry of God, okay, but it is fixed asset. I want to do the physical verification. So then they will take you to the locker where all the gold of the God has been kept over there. Right. So anyways, what are we talking about over there? Easily convertible asset. Right. So that small pouch, blue color pouch, in which 700 crore diamonds are there. You go to a merchant, right, a diamond dealer, in the Nirav Modi. You go to him. You tell him, these are diamonds of 700 crore. He says, I will give you 50 crore. You are more than happy. Even if 50 crore you receive, right? So what is that? Easily convertible assets, such as bearer bonds, diamonds, or the computer chips. Then fixed assets are small in size. Like, these computer chips nowadays, right, which are put in the cars and the laptops and all of them. Those chips are so small in size. Right? And what does it say? Small in size, marketable, or which lack the observable identification or the ownership. Okay. Right? So what is it? The nature of the asset is only such that a misappropriation can be done. Are you understanding that? And then you have the inadequate controls or the lack of control. And again over here, the attitude or the rationalization. There, what was the first point in the attitude rationalization? We are known for not complying with the law. We are known for tax evasion. We always fight with our auditor. We dominate our auditor. That was the attitude rationalization for the fraud in the accounting. Now, what is the attitude rationalization for the misappropriation of asset? You say there is a control. We never follow the control. Disregard for internal control. You understand? Every morning you have to mark your attendance, you have to, fingerprint reader. You say, no, we will not follow the controls in the organization. It says whenever inventory is being received in the company, barcoding should be done. So you say, no, we will not do the barcoding. Right? So obviously it will lead to the misappropriation of the asset. Then again, what does it say? Displeasure or the dissatisfaction with the entity or the treatment of the employee. Right? So again, you are not happy. Again, similar to what we had studied in the fraudulent financial reporting, that you expected a promotion, but you did not get the promotion. So behavior indicating the displeasure or the dissatisfaction with the entity. Right. Then what does it say? Changes in the behavior or the lifestyle. Right. So what happened? This particular employee, he is being working with your company for last 4 years, and you know that the salary paid to this employee is 22,000 per month. Right. So decent enough. Right, he's getting a salary of the 22,000 rupees per month. Okay. Now, what happened? All of a sudden, you see that this employee lately has stopped bringing the tiffin from home and he's every day ordering from outside. Right, then what you see, branded shoes, branded watch, all the latest accessories, latest bike he is purchasing and all branded clothes he's wearing. So now you wonder, how possible 22,000 salary? Right, so either maybe married into a rich family, that is one possibility. You understand? Or another possibility is what? That he is having the other income from the company, right? So changes in the behavior or the lifestyle that indicate that assets might have been misappropriated, right? And the last one, what does it say? Today, the employee, right? He didn't want to. He's actually a very, what do you say, honest employee, but he just got tempted. So he say, let me see, what happens if I do a fraud of 10 rupees. And then he realized what happened, nothing happened. So then confidence increased. So then next day he added 1 0. Then again what he realized, nothing is happening. Then what he did, one more fraud. Then what he did, one more fraud, one more fraud, one more fraud. One day become the CEO of the company and took over the ownership of the company. Right, so what happened when first time only that fellow took the 10 rupees, you should have twisted his ears. You understand that? No, when a small child for the first time they speak a lie, there only you have to pinch their ear. Otherwise, what message gets conveyed to them? It's okay. This is the way of life. You understand that now? So what it says over there? Tolerance of the petty theft. Right, so say once the owner of the organization, he was sitting in the car, and then what happened, he gave some change to somebody, he bought something, and then after that his 5 rupees fell somewhere in the car. Now owner having hundreds and thousands of crore rupees, 5 rupees immaterial for him. But what he did, he made the driver of the car search in the entire car for 1 hour. No, how come 5 rupees can be lost? No, please search for my 5 rupees. So then and then it becomes a news in the office. Oh boss, today 5 rupees, and for that 1 hour he was waiting over there and he ensured that that 5 rupees has been received. Right, so employees of the company, will they also be vigilant? Yes, and say what, boss was sitting in the car, he left 2,000 rupees over there and then nobody noticed and he also never bothered. Employee took the 2,000 rupees. So obviously what does it say? It gives an indication of the possibilities of the fraud. Are you understanding that? Right, so like there is a very popular fraud which earlier, nowadays so petrol pump business not much there. Like, can you imagine like petrol pumps? I think ever since we have all been born, we've always seen petrol pumps, but maybe a matter of time wherein petrol pumps will become extinct, right, with the coming of the electric vehicles and so. But in petrol pumps, like say if I want to fill a petrol of 100 rupees, what they do, they stop the meter at 99.97. Okay, so 0.03, I also don't mind. You understand? Then I say 0.03 immaterial, like forget it. Likewise, in a day, say 1,000 people come at the petrol pump. And now at the petrol pump, there are the 4 counters. At each of them, the rounding off. Like that, there are 20 petrol pumps, right? So in a day, the rounding off error is coming to 10,000. So now if you multiply it by 365, the amount is going into crores of rupees. Right, it goes into into lakhs and crores of the rupees, right? So what you thought as a 0.03 is so immaterial. What is it? But if you take the total, right, of all one petrol pump and then one day and then all petrol pumps and all of them put together, even that petrol pump rounding of fraud can go into lakhs and crores of the rupees, right? It can go into the lakhs and crores of the rupees. Okay, right? So what is it that we are talking over here is the 1, 2, 3, 4, 5, 6. What is the 1, 2, 3, 4, 5, 6? Incentive, pressure, opportunities, attitudes, rationalization for the fraudulent financial reporting and for the misappropriation of the asset. And then one last question which we have for discussion over there is the circumstances relating to the possibility of the fraud, right? So now coming to the last part of the chapter, which is regarding the circumstances relating to the circumstances relating to the possibility of fraud. Right? Circumstances relating to the possibility of fraud. Earlier question what we studied was all from the management side, fraud risk factors. Why would management have an incentive, pressure, opportunity, or an attitude rationalization to do either a fraud in accounting or to do a misappropriation of the asset? Now it says you are the auditor of the company. Right? You are the auditor of the company. And then sometimes, you are doing your studies, you're sitting in front of the TV or you're watching something on your mobile. And then all of a sudden you say some smell is coming. You understand? And then you go to the kitchen and then what you see that the burner is kept on over there. Right? It did not get switched off. Right? So now, why did you think something is wrong? That why did you go to the kitchen? See, normally you were watching the TV. So there was no need for you to go over there. But because of the smell, you went over there. And then you came to know that the gas regulator, right, the switch is on only. It has not been switched off properly, right? So that is why the smell started coming. Are you understanding that? So now as an auditor, what happened in the audit? What are the circumstances because of which you are able to smell a fraud? Right. What does it say? One, there is a discrepancy in the accounting record. There is a discrepancy in the accounting record. Second, there is the conflicting or the missing evidences. Third, there is the problematic or the unusual relationship between the auditor and the management. Oh my God, what an image. No, problematic or unusual relationship between the auditor and the management. And the last one is the others. Okay. Right, so what does it say over there? There are the auditor, why you are able to smell the fraud. Why? Discrepancies in the accounting records. Then the conflicting or the missing evidence. Then there is the problematic or the unusual relationship, right? Or the unusual relationship between the auditor and the management, right? And then last one, fourth one you have over there is the others. You understand the difference between fraud risk factors and circumstances relating to possibility of fraud? What was fraud risk factors? Why is the management doing the fraud? And now they are to doing, but as an auditor, how will you come to know they are doing the fraud? So these are the circumstances relating to the possibility of the fraud. That is why management does a fraud. Because of IPO and attitude rationalization and so. And what type of frauds they do? What types of fraud does the management do? Fraudulent financial reporting or the misappropriation of the assets. Now, as an auditor, why would I think that there is a fraud in the company? Are you able to follow this, everyone? Right. So, after the opportunities, next what questions you have over there? Discrepancies in the accounting records, conflicting or the missing evidences, and the problematic or the unusual relationship between the auditor and the management. Is it clear to all of you? Right, so now what we are talking about over there is the discrepancies in the accounting records, right? What is the discrepancy in the accounting record? Right, there is a discrepancy in the accounting records of the company. That means what is happening over there? Accounting records, the transactions are not recorded in a complete or timely manner. Then there are the unauthorized, unsupported transactions. Then there are the last minute transactions, right? So first 3 points are regarding the transactions. What are the points regarding the transaction? Transactions are not recorded in a timely manner. Transactions are unsupported or last minute. And a full year though did not take any consultancy. But on 28th of March, they passed a provision entry, provision for lawyer fee. And they say, what lawyer fee? They say, no, every month we took a consultancy from the lawyer of the 5 lakh rupees. So for the year, we need to pay 60 lakh to the lawyer. So we will pay to him next year. So right now you're making a provision for the lawyer fee. What is this? Fictitious journal entry. When particularly close to the end of an accounting period. Why? You want to reduce your tax liability, to manipulate the operating results or to achieve other objectives, right? Obviously, if I make a provision, that much I can deduct it. You understand? And obviously, it will reduce my profits. Obviously, it will reduce my tax liability. Are you understanding that? Right? Accrual basis of accounting, right? So what is the company doing? Transactions they are not recording properly, or there are unsupported transaction, or there is the last minute adjustments, or what does it say? Evidence of the employee access to the systems and records is inconsistent with that of the need to perform the duties. Right, so if I need to handle the cash, do I need access to the cash book of the cash, what you say, the physical cash of the company? Right, if I need to handle the cash of the company, should I have access to the cash register of the company? No. What did we say? Accounting and custodial function should be segregated. If I'm handling the cash, should I have access to the cash register of the company? No. But here, what does it say? It's the evidence that employees' access to systems and records is not consistent with that which is necessary to perform their duties. Like, what is my duty? I need to record the purchases. And what I have access to? I have access to the purchases, and I also have access to the sales of the company. Is there a need for giving me the access to the sales of the company? No. Is it required to perform my duties? No. And last one, what does it say? The tips or the complaints to the auditor about the alleged fraud, right? So they've come and told to the auditor about what types of fraud has happened in the company, right? So the management themselves have come and told to the auditor. Okay, auditor, probably we think, something has gone wrong in the inventory of the company, or, we think this type of fraud has happened. So obviously, because of that, the auditor may think that there is a fraud, right? So what is this? This is the discrepancies in the accounting records. Accounting records means the transactions. What about the transactions? They are not properly recorded, or the transactions are unauthorized, or they are the last minute transaction. Then employee access is not required for performing their duties. It is inconsistent with the need for them to perform the duties, and the tips or complaints to the auditor. Okay, then what is the next one over there? Conflicting or the missing evidences. Missing means unable to obtain the sufficient appropriate audit evidence. So what is missing? Say the rent agreement of the company is missing. Next, what is missing? The non-existent cancelled checks, right? Or the checks are missing, right? Where cancelled check should be returned, but they are missing. Then the inventory of the company is missing. Then the electronic evidences of the company are missing. Right? The electronic evidences of the company are missing. So what is one thing over there? It is the missing evidences. And second, what does it say? It could be the conflicting evidences. Conflicting evidences means what? I asked company, how much FD have you kept with the bank? They said 5 crore. I asked the bank, how much FD this company has kept with you? They said 1 crore. Right? So that means there is a difference between the entity records and the confirmation reply. So are you able to corroborate? No, it is contradictory. Right? Are you understanding that? There is a conflict between what? The entity records and the confirmation replies. Then there are significant items on the reconciliation. Then documents which appear to have been altered. Then large number of entries being made to the accounts receivable. Large number of credit entries. Generally, debtors account we debit. Debtors account we debit, right? We charge, no, we show it as a receivable from the debtor. But now what they are doing a lot of credit entries. That means sales and now sales return. You understand? No, first recorded sales. Then that time what entry passed? Right? What do you say? The debtors account debit to sales account. And then later on reversing all those entries. So sales return to debtors account. Are you understanding? Right? So large number of the credit entries. Right? So what does it say? One, the missing. What is missing? Documents are missing. Checks are missing. Inventory is missing. Electronic evidences are missing. Then after that, what is conflicting? Right? The documents are conflicting. They look to be they look to be altered. Then there are unexplained items. Then there is an unusual discrepancy between the records and the confirmation reply. And there is large number of sales returns, right? Credit entries means what? There is large number of the sales returns. Are you understanding that? Okay, right. Then what does it say? There is a problematic or an unusual relationship between the auditor and the management. Did we already study something like that? Strained relationship. Where was that strained relationship? It was in the attitudes and rationalization of the fraudulent financial reporting. Are you getting that? Fraudulent financial reporting, in that you had the attitudes and rationalizations, in that what you had the strained, do you remember that? Strained relationship between whom? The auditor and the management. So here also what they are saying, there is a problematic relationship between the auditor and the management. What did they tell the auditor? Auditor, start your audit on 2nd April and give us the report by 5th April. So what are they doing? They are putting the undue time pressures on the auditor. Then auditor since last 20 days is asking for the minutes of the meeting. And every day what management is telling? Tomorrow. Tomorrow I will give you. Tomorrow I will give you the minutes of the meeting. So there is the unusual delays by the entity in providing the requested information. Then what does it say? Auditor says, I want to check your electronic files. But there is the unwillingness of the management to give access to the electronic files. Then auditor is telling management, give the additional disclosures in the financial statements. But again there is the unwillingness of the management to give the disclosures. Auditor has identified the deficiencies in the internal control. He is telling management, please rectify, please correct these deficiencies. But again there is a unwillingness to address the deficiencies in the internal control. Are you understanding that, everyone? Right, so what does it say? The unusual relationship between the auditor and the management. What does it say? There is a undue time pressure, then is an unusual delay, and then there is the unwillingness to provide the electronic files, there is the unwillingness to give the disclosures, there is the unwillingness to address the deficiencies. Right, so one, they are giving me the information, but they are giving me after great delay. Or second, what they are doing, they are not giving me the information only. So one, there is a delay in giving the information, or second, there is a denial in giving the information. One, they are giving it, but just like, you know, I'm about to sign the audit report. They say, auditor, you asked for minutes of meeting, not take. So like there is unusual delay. And second, no, they're just not giving you the minutes of the meeting. Then what does it say? The complaints by the management about the conduct of the audit, or the management intimidation. You understand intimidation? They're threatening the auditor, dominating, they're putting the auditor, yes, pressure on the auditor, intimidation of engagement team members, particularly in connection with the auditors, critical assessment of the audit evidence, or in the resolution of the potential disagreements with the management. Auditor knows professional skepticism. He is saying, no, I want the supporting, I want to check the signature, and management is getting irritated. Right, so they are getting threatened. Management intimidation of the engagement team members. Right, so that is the complaints by the management. And then also, what is one more point? One, either they give you the data, but they give it to you late, or second, they don't give it to you at all. What do they not give you? Access to the records, facilities, and the employees. And second, they also don't give you access to the IT operations and the staff facilities. Are you getting that? Right, so one, what does it say? There is the problematic or the unusual. Oh my God, this is amazing. What does it say? An exam question will come. How it will come? That question, how it will come? Strained. So D. Now here, how it will come? Problematic or the un. So you have to catch that un. Right, you need to catch that un. What is that un? undue time pressure, unusual delay, and then unwillingness to give access to electronic files, unwillingness to give the disclosures, unwillingness to address the deficiencies. And then after that also, what does it say? They are they are giving it but giving it late, or second, there is denial of access to records facilities, or there is denial of access to the IT operations, or there is the complaints by the management. Okay, and then what do you have over there? Again, the others, right? So what does it say? Auditor, right? Is the in a company, can management and TCWG be different? In a company, can there be management one and TCWG other? Okay. So now, auditor says, management is asking, auditor, where you're going? So auditor says, I'm going to meet your TCWG. So management says, no, I will also come with you. You should not meet TCWG in my absence. You know what they are telling auditor? You should not meet the TCWG in my absence. So unwillingness by management to permit the auditor to meet privately with the TCWG. Right? So they are not permitting the auditor to meet the TCWGs without their presence. Okay. Then what does it say? Right? Accounting policies, right, that appear to be in variance with the industry norm. Like what is the example? Say the company, Geo, Mio, CO, Rio, right? All they are in the same industry, right? All of them, they are in the same industry, right? Geo, Mio, Rio, CO, FIO, whatever, so many can be there. Okay, now you are the auditors of all these companies. Can I be the auditor of all these companies? Yes. And now what I found out, okay, Mio, Rio, CO, FIO, they are following the FIFO method for the valuation of inventory, right? Is FIFO a recognized method, first in, first out? Yes. And what you found out, okay, Geo, they are following the weighted average method. Is that also recognized? Is that also recognized? Yes. Is there anything wrong in the weighted average method? No. But what is the industry trend? FIFO. So they are in variance with the industry norms. Right? They are in variance with the industry norms. Nothing wrong with weighted average. But that's not the trend in the industry. Right? That's not the trend in the industry. Okay. Right. Then what does it say? Last year the company said what? Debtors are very horrible people, you know. We need to make a 20% provision. Next year, what they're saying, debtors are God-sent people, you know. Only 2% provision to be made. It says these debtors are disaster for the company. 65% provision to be made. Next year, they say, oh my God, we are blessed to have such amazing debtors of the company. They say, kya? How inconsistent are you? Right? How inconsistent is the management of the company? What does it say? Now, debtor, same old people. Always they pay on time. All good people, genuine people. But what you are doing? Frequent changes in the accounting estimates that do not appear to result from the change circumstances. Is there any change in the debtor repayment ratio? Nothing. But what you are doing? Changing your accounting estimate time and again. And then what did we say? When you should pull the year? For 10 rupees also. Otherwise, what does it say? Tolerance of the violation of the entity's code of conduct. That one employee, he violated the code of conduct of the company. That he was not supposed to disclose the information, but he disclosed the information, or he did insider trading of one share. Insider trading, one share, immaterial. Material. Right? Tolerance of the violation of the entity's code of conduct. Right? So what does it say? Auditor said, I want to meet your TCWG. Right? What management says? No going alone. I am also coming. But then he asks, why you want to meet? What you say? That their accounting policies are in variance with the industry norm. So I need to ask the TCWG, okay, everybody is so following FIFO. Why you are following the weighted average? Then after that it says, no, management says, I will give you the explanation. Then you say, no, I also need to ask the TCWG regarding why there is the frequent change in the accounting estimates. And then also that we also need to ask the TCWG regarding the tolerance of the violation of the code of conduct. Are you understanding that? Right? So those are the points regarding the others. Right. If you look into the Yes, question point over here. What does it say? Unusual delays by the entity in providing the requested information shows problematic or unusual relationship between auditor and management. How they pick up one point. And what they say, unusual delays by the entity in providing the requested information shows the problematic or unusual relationship. Yes, what do we say? It is a strong example of the circumstances that indicate the possibility of the fraud. Now this happiness, I don't know from where they made happiness. This happens only because of the management's intolerance towards the auditor's professional skepticism. Right? What does it say? This happens only because of the management's, look at the beautiful language over there, management's intolerance towards the auditor's professional skepticism. The management is getting irritated. Auditor, how much question you are asking? Auditor, your management is having intolerance towards the attitude of professional skepticism of the auditor. And now, excessive interest by management in maintaining or increasing the inventory price or the earning trend is an example of the fraud risk factor relating to the opportunity. No, it is a fraud risk factor relating to the rationalization. Right, so this is just to give you a glimpse, of what every sentence in the book, how it could become a question in the exams, right? So I hope you've downloaded the app by now. Then now, maybe let's try with fraud only because we've just completed with fraud. Oh. Oh, it's already open over here. Okay, right. So maybe let me try if it opens now. Right, so the factors which distinguishes, okay, they can probably work better on the font size and all, but the factor which distinguishes an error from fraud and other irregularity is the whether it is caused by an officer or employee, intention, materiality, or whether it is caused by the auditor or the client. It is the intention. Okay, right. Then which of the following is an brightness? Zoom, okay. Which of the following is an example of inflating the cash payment? Making payment against purchase voucher, teaming and leading, not accounting for cash sale, and making payment against inflated vouchers. Right, so making payment against the inflated vouchers. Okay, right. Then what does it say? Yes, when credit purchases of 5,100 is recorded on the credit side and credit sales of 5,100 is recorded on the debit side. This side kind of error is called as the commission compensating principal or commission. Yes, omission compensating principal or commission. It is called as the compensating error, right? It is called as the compensating error. Okay. Right, then after that, what does it say? This type of error, existence of which becomes apparent in the process of compilation of accounts. That is, they are thrown out on their own when you prepare the accounts of the company. Self-revealing, intentional, concealed or the unconcealed errors, these are the self-revealing errors which appear themselves during the preparation of the accounts. Okay, right. Misstatements in the financial statements can arise from fraud or error. The auditor is concerned with fraud that causes a material misstatement in the financial statements, which may be classified as fraudulent financial reporting or the misappropriation of asset. There are events or conditions that indicate an IPO to commit a fraud, which is called as fraud risk factor. Which of the following is an example of a fraud risk factor relating to misstatements arising from the misappropriation of the assets? Known for violating the laws, management's failure to remedy the known deficiencies in control, inventory items that are small in size but of high value or demand, or interest of the management in employing inappropriate means to minimize the reported earnings for the tax motivated reason. Right, so which is the fraud risk factor relating to the misappropriation of the asset? The diamonds. Right, the inventories that are small in size but are of high value or in high demand. Are you getting that? Okay, right. Then misappropriation of assets may occur because there is a, what does it say? Adequate record keeping with respect to the assets, known history of the securities law, lack of complete and timely reconciliation of the asset, or the dispute between the shareholders, right? Lack of the timely, complete and timely reconciliation of the assets. Okay, right. Then what does it say? One of your junior audit team is confused with the term material misstatement. You explain to him that material misstatement is a untrue information in the financial statements that could affect the decisions of one who relies on the statement. Which of the following would constitute a material misstatement? An error of 5,000 in relation to asset of 20 lakh, a payroll fraud of 100 in a company where profit before tax is 11,000, non-disclosure of a material uncertainty, and financial statements have been prepared on the going concern when the company is in the process of being liquidated. Right, so what would cause the financial statements to be materially misstated? 1 and 2, 3 and 4, 2 and 3, and 1 and 4. Yes, so one which you are sure about? Right, 4. Okay, financial statements have been prepared on going concern, but when the company is in the process of being liquidated. So 4 is sure. That means A is gone and the C is gone. So now you have only B and D, right? What is A? Right, what is D over there? Error of 5,000 in relation to asset of 20 lakh. That cannot be considered to be a material misstatement. That is why you can select the option as the B. Okay, right. Then what does it say? If as a result of the misstatement, cauliflower, resulting from fraud, the auditor encounters the exceptional circumstances that bring into the question his ability to continue performing the audit, he shall withdraw from the engagement immediately, report to audit team regarding the withdrawal, determine the professional legal responsibilities, or ask the management for his withdrawal. Right? Determine the professional legal responsibilities as applicable in these circumstances. Okay. Reporting of fraud is to be made by an auditor to the central government when the fraud amount is exceeding 1 crore or 1 crore or above. One crore or above. What did I tell you? 99,99,999. Till that, only to the audit committee, board of directors. 1 crore or above, you need to report it to the... Right. And now there are some integrated case studies. Look over here. Right, so now for the integrated case studies, on the left hand side the entire story has been given, and then the answers have been, options have been given over here. What does it say? Which among the following is not a fraud risk factor relating to fraud in an organization? Incentive or pressure, is it a fraud risk factor? Yes. Perceived opportunity to commit a fraud, is it a fraud risk factor? Yes. Individuals being able to rationalize the act of committing a fraud, is it a fraud risk factor? Yes. And taking undue advantage of the inefficient internal control as such as does not come in the list of the fraud risk factors. Okay. Which of the kind of fraud that the auditor has faced in issue 2 is referred to above? Right. So we need to look into the issue 2 over here. What is the issue 2? The auditor finds that there is something unusual about the balance outstanding in the receivable. Date-wise verification of the bank reconciliation performed by the auditor has resulted in the mismatch in the dates of most of the receivable ledger. The auditor has identified a pattern in the mismatches. He suspects that there might be a misappropriation of cash, and the detection of the misappropriation is being prevented by crediting the amount received subsequently to the account of the customer who paid earlier. 100% it has to be the teaming and leading. Okay, right. Then what does it say? Which among the following is incorrect in the context of the two types of fraud, FFR and the MOA? Which of the following is incorrect? Fraudulent financial reporting is achieved by manipulation. First M, you remember? Fraudulent MMM. Right, so achieved by manipulation. Then, what does it say? Misappropriation of assets is achieved by M. By intentional misapplication of accounting principle? No, that is also fraudulent financial reporting. Fraudulent financial reporting is achieved by MOC. Correct. And misappropriation of assets is achieved by and causing an entity to pay for goods and services not received, right? So which is the incorrect option over there? Which of the following statement is incorrect? It is the B. Okay. Right. Then after that, issue 3. Right. So now again we need to read the issue 3. On deeper scrutiny, the auditor also finds that the company is holding the significant bank accounts and having branch operations in the tax haven jurisdictions. Also, yes, here they write haven spelling always as H-A-V-E-N. Whenever they say tax haven, that is how it is. Right? Also, there are significant related party transactions which do not appear to be in the ordinary course of business. Kya hai ye? These are the opportunities for the FFR, the fraudulent financial reporting. So what does it say? It is a risk factor creating a rationalization. Is this a risk factor creating an incentive pressure, or a risk factor creating a perceived opportunity for the fraud and results in the misstatement due to the fraudulent financial reporting? Okay. Then next one, issue 4, identified. Okay, now let us read what is the issue 4. During the, so I told you now, 10 mark question can come in the exam only for fraud. Okay, right. So during the course of the verification, it is found by the company that there is no proper hierarchy and approval procedure for the senior management expenditures such as the travel reimbursement, right? So no proper hierarchy. So this is again a right, identify. Issue 4 is a fraud risk factor. What is the condition created by the fraud risk factor? Search for it in your books, everyone. Right, what is the issue 4? Senior management expenditure is not properly approved. 1, 2, 3, 4, 5, 6. Where is it coming? Senior manager, no, why it would come in 4? 4 is the what? Yes, anticipated layoffs and all of that is then inconsistent with the expectations and all. What am I saying? Issue 4, search. During the course of verification, it is found by the auditor that there is no proper hierarchy and approval for the senior management expenditure such as the travel reimbursement. Right, so what does it say? 5, what is 5? Opportunity for misappropriation of asset. Now you are saying 5, but 5 option also has to be there in these 4 options. No? Okay, right, so what does it say? Rationalization due to FFR. Check whether it's in their list of 3. 3. Rationalization for FFR, then incentive pressure for the misappropriation of the asset, then the opportunity due to the fraudulent financial reporting, or the opportunity for the fraud and the resulting in the misstatement due to the misappropriation of the asset, right? So what does it say? A perceived opportunity for the fraud, right? Most probably it should be the right, fraud and results in the management due to the fraudulent financial reporting. Okay, right. Then next one. What is the next one? Fraud in the above case scenario has been committed by resorting to which of the following right? Material misstatements identified during the audit. Right, so again you need to read the entire case study over there, right? So now that's the next question over there. Balwant Singh, the MD of Suvidha Stores, has requested Arun Kumar to carry out the stat audit of his store head office at Pune. On a discussion the terms of engagement of the audit, Balwant tells CA Arun that he smells something fishy going on the accounts department and wants CA Arun to report, keeping susceptibility of fraud of 240 in mind. CA Arun tells Balwant that fraud results from material misstatement either due to FFR or MOA. He also tells him about the various fraud risk factors which form the reason behind the commitment of the fraud, and also tells him about the reporting procedure. On scrutiny of the accounts and after discussing with the employees at the head office, CA Arun noticed the following. What? That the head accountant seems to have colluded with the cashier. So that means there is a breakdown of the controls, right? The head accountant seems to have colluded with the cashier of the company. Then X has reported higher than usual profit in the books of account because apart from his salary he also receives the incentives which are based on the profits earned by the company. So obviously in that case he has done the fraudulent financial reporting. Okay, then why the cashier has shown some bogus expenses which have not actually been incurred. So what is he doing? He is doing the defalcation of the cash, right? Defalcation of the cash, and CA Arun estimates the amount involved in the fraud to be 5 crore, right? So do you see any misappropriation of the goods happening over there? Right, the head accountant seems to have colluded with the cashier. Then they are reporting higher than the usual profits, and cashier has also shown the bogus expenses which have not been fully incurred. Right, so is it fraudulent financial reporting, misappropriation of assets, or the defalcation of the cash? Now actually the cashier, what does it say? Bogus expenses which have not been actually incurred, right? So cashier, so is there defalcation of cash also? Yes, and probably this heading may be, I don't know, we need to check it whether it should have been the misappropriation of the assets. In that case it could be the either B or C. Okay, right. Oh my god, look at this. The fraud risk factor behind committing a fraud is incentive pressure, opportunity, perceived rationalization, perceived opportunity, or adventure. Right, what does it say? The fraud risk factor behind committing the fraud is what? Right, seems to have colluded with the cashier, or there is what does he say over here? Tells him about the various frauds in the company, that he smells something wrong in the company and wants CA Arun to look into the same, and the reason behind the commitment of the fraud. And on scrutiny of the accounts and after discussion you come to know these are the frauds which are being committed, right? So is there an incentive pressure, or there is a rationalization, or there is an opportunity, right? So what does it say? There has to be an opportunity. Why? Because the head accountant has colluded with the cashier, so there seems to be a weakness in the internal control. Okay, right, then how has the fraud been committed by X, right? So again we need to read the story in detail over there, and then on the basis of that we can write down the answers. Anyways, right, what we do after we finish writing the test, we click OK, and then after that you close the window, and then we've written the test for the chapter number 5, right? So hopefully the report, yes, so the report gets generated. So it says unattempted, correct, and the wrong answers over there, right? So then you get to read all the answers. So what you can do, even though if you attempt it once and then after that you go through this list also, right, then also you come to know regarding what are the answers, right? So that completes how many chapters? No stock? 2 done? 3, 4, 5, yes, 8, 9, 10, 11, 12. Right, have we done these chapters over there? And 1 done? Halfway, like only the essay 200. Is it clear to all of you? Right, so we shall continue tomorrow. Bye, bye. Ooh.